Hi, welcome to the Market Alert for Wednesday, the 15th of November 2023. So yesterday stocks soared, what a surprise, and the yield and dollar crash as Fed tightening cycle dies. Countdown to cuts begins, apparently. So market rips higher after softer CPI sends yields and the dollar tumbling, which obviously moved the metals to the upside. What was the reason for this? Well, as we said yesterday, if the CPI, or as it's known in the trade, the CPI, actually fell, then the markets would move higher, and that's exactly what happened. Every single one came in lower than forecast, and today we've got the UK at 7 a.m. also forecast to drop 2% according to this. If that happens, then you can expect another market day of prices ripping to the upside again. It doesn't matter about anything else today. That's the only thing that's going to be focusing the market's attention there. So let's move on. We'll start off with the implied volatility. Interesting picture here as well, because the market moved sharply higher yesterday. You can see there that we're down at 1042, having got up to 16.29. 9.94 is the level we're looking at, because when we get down to these levels, we know that we get a correction in the market. The only thing that I would say that this could be a bit of a prolonged one sideways to higher, because obviously looks like Santa's turned up early for the bankers' bonus here. So the momentum now is certainly going to switch to the upside unless there is some geopolitical event, because we've had the non-farm payroll, CPI out of the way, interest rates likely to start falling next year. On hold for the time being is bullish enough, and the excuse required to move prices to the upside. So let's move along, have a look at the Dow and all of the markets, and see how they reacted yesterday and what we can expect during today's trading session. So in the Dow there, you can see the market moving sharply higher yesterday. One of the biggest bars we've had for a while. There was this one back here, which I think was probably non-farm payrolls. And there you can see a big move. Let's just have a look, see how big the move was. And let's go here and let's just have a look from low to high. 633 points yesterday for the Dow, but it's sparked by the news. Otherwise the market was stuck in a 50-point range, and that sent the market higher. And you can see at the moment we're already heading towards yesterday's high there as well at the moment. And in the German DAX, we're moving up. We've measured the fib from there down to here. That takes us to 89. You've got the 200 MA in the way there. It'll be a target for today, that's for sure. We're already above yesterday's high if we look at the 30-minute chart. Just going through there now before the release of the UK CPI numbers. So already got the momentum to the upside there for the DAX. In the S&P 500, also heading up to 4516 and 4540 thereafter, which takes you back to the high to the left there, which goes all the way back to September the 1st. So a big move at the moment for these markets. 30-minute chart, you can see the explosive move there. The only one that didn't really react that much was the FT100, which you can see there. It's got quite a few resistance areas, still stuck in a sideways channel, probably due to a lack of faith in politicians at the moment over the last few days. Certainly another issue which I'm not going into, but 30-minute chart, you can see the market reacting, but it was less than 50 points in the initial 30 minutes, managed a few more points, but at the moment is taking out yesterday's high in readiness for that 7 a.m. CPI number. In the currencies, US dollar falling out of bed yesterday. As I said in yesterday's alert when we spoke about the dollar will only go up if it as the prospect of interest rates continuing to rise, but obviously that was removed yesterday, so the dollar moving down, which means of course the metals were allowed to move up as they were inversely related, but not to the extent that you would expect with the depreciation in the price of the dollar yesterday. But then there's no surprise there, is there? So let's have a look at the silver gold market and also the gold silver ratio. So in silver yesterday, moving sharply to the upside, but you've got the 200 MA there. We can see what happens when we get back to the 200 MA. So despite the fact that the dollar's moving higher, don't be fooled that they're going to let the silver price go above $25 an ounce. That's not going to happen anytime soon. Yesterday, obviously, in reaction to the news, and the gold also the same, but not a big move, as you can see there. Still below $2,000 an ounce. And there's the reaction to the CPI numbers, but again, already starting to come off yesterday's high in the 30-minute gold there. And in the gold-silver ratio, you can see we moved sharply lower yesterday. Silver moved faster than gold. That was evident by the price bars. But like I say, once we get to the 200 MA in the daily chart for silver, then watch out for the shorts coming back into the market and crushing the price once more. So in the basic trades for yesterday, unfortunately, the recording became corrupted, so we'll just review from looking at the historical chart. We started off with the potential buy. That was soon sorted out as they moved the market lower, taking the stop out and then going down to the first profit target and the 200 MA that became a support area. No surprise there. We didn't get a signal off this bar. It didn't quite meet the criteria, but the market then moving higher. And then as we headed into the latter part of the morning session, the market trading sideways in a range there. I was surprised the market actually moved up, to be honest with you, as it waited for those CPI numbers. Normally the market is fairly sideways during the pre-release of the data, particularly the CPI. Let's have a look at the afternoon session. So here you can see the market's reaction to those CPI numbers up very, very strongly there. And this set the tone really for the rest of the afternoon. We did have a potential buy signal there that was filled. We'll just drag the chart over a bit so you can see this in a bit more detail. So if we mark this up, we can see that the market moved up quite nicely there. Let me just show you where we are. We had the market peak there was 44 points. But the market slamming down, as you can see there in that bar, coming back nearly 25 points just in this one bar in the 2-minute chart before the market then closed below the 5-bar moving average, bringing back to just the scalp level there, waiting for the stop to close below the 5-bar moving average. That's an unusual bar, I have to say, because then the market then soon recovered and headed back in that same direction. And then finally we had another sell, but the market having taken that 25 points, by this time we'd done 50, the market then reversed, stopping out this trade. So a strange one all round, to be honest with you, because of the bizarre numbers, and today it'd be even more bizarre if we see a 2% drop in those inflation numbers at 7 a.m. I think it's 2%, isn't it? It just seems so outlandish, but it is 2% there. So we'll just have to wait and see for the core PPI. Just for the inflation there. Yeah, 6.7 to 4.7. If you want to see the RPI, by the way, what they used to use for the inflation numbers, then you have to show the low impact. They sort of hide it. It's bizarre. Then you'll see the RPI there. Again, 8.9 down to 6.3. So, wow. So we'll see what happens at 7 a.m. there. But just before we finish, let's have a quick look at the overnight 2-minute for the basic trades. So we're above yesterday's high at the moment. Like I say, we're just waiting for those numbers. So it's currently 10 minutes to 7. So not long before they are actually released there. So the market, all the averages in the right order as well, just trying to move to the upside. We'll see what happens. Probably have a shakeout to the downside and then move back up sharply. Certainly if we get that 2% difference. Okay, that's it for this one. As ever, thanks for watching. See you in the next.